Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, December 3rd, 2008. We begin in Australia, as last night the Australian Industry Group released its services PMI, which showed the index falling to 37.8, the 8th month that the sector has been in contraction. Sales, new orders, and employment levels all fell to record lows in the index. Third quarter GDP, meanwhile, grew 0.1% on a quarterly basis, lower than forecasts and at the weakest pace in 8 years. Exports and household spending neither added or subtracted to the change in GDP, while an increase in imports detracted 0.4 percentage points from growth in the quarter. It should be noted that excluding a strong contribution to growth from the farming sector, overall GDP contracted 0.3%. In Europe, the final version of services PMI was revised down to 42.5 from the preliminary reading of 43.3. That marks the lowest level for the index since its inception 10 years ago. Weak activity in the services sector will put more pressure on the ECB to cut rates aggressively. Expectations for tomorrow's ECB meeting are for a rate cut ranging from 50 to 100 basis points. A second report showed Eurozone retail sales down 0.8% for the month of October, while the annual pace was down 2.1%. Retail sales have been pressured the entire year, as initially high inflation caused consumers to scale back their purchases, but now with the Eurozone economy in recession, consumers are cutting back spending for other reasons. The euro-dollar pair fell in favor of the greenback overnight, retesting the area around 1.26. With possibly a bigger than expected rate cut from the ECB on the horizon, a weak services report, and European stocks drifting lower, the euro was down against the dollar and yen. The euro-yen pair fell back to its low for the week seen yesterday near 116.80 as the risk sentiment returned to Monday's gloomy mood compared to yesterday's rally mode. The 116 level is key support, and it is important to see how the pair will respond to tomorrow's ECB decision. In the UK, meanwhile, the nationwide Consumer Confidence Index fell 6 points to 50 in November, despite falling fuel and food costs and a substantial reduction in the Bank of England base rate. Consumers are more pessimistic, as the UK is now in a recession, unemployment is on the rise, and financial market instability continued in November. Adding to that, the services PMI fell to 40.1 from 42.4, which is the lowest the index has been in its 10-year history. The employment and confidence sub-indexes also fell to their all-time lows. The Bank of England is expected to cut rates by 100 basis points tomorrow morning. Just like the euro, the pound fell to the dollar as well, mainly during the European session following the UK services report. The pair hit a new 3-week low near 1.4665 before rebounding somewhat in New York trading. In the U.S., the ADP employment change saw the U.S. shedding 250,000 private sector jobs in November, while the October number was revised down as well. The fall was led by a decrease in the goods-producing sector. The report, which precedes the government's non-farm payroll release on Friday, was far below forecasts and may signal a bigger than expected job loss number on Friday. U.S. worker productivity increased more than originally forecast in the third quarter. Productivity was up 1.3%, the revised figures from the Labor Department showed. The bigger than expected jump in productivity means companies were able to squeeze out more output per worker. Companies reduced expenses by cutting worker hours at the fastest pace in 6 years. They also did not raise wages as much as earlier reported. Labor costs grew 2.8% compared to the preliminary 3.6%. In a third release, the ISM non-manufacturing index plunged 7.1 points to 37.3 in November, a much worse result than expected by economists and the worst level for the 11-year series. The services sector has stayed afloat longer than the manufacturing sector, but is now in a sharp downturn and signals a deepening to the U.S. recession. The dollar-yen pair has been in a sideways consolidation the last 2 sessions following a sharp fall on Monday. Stocks opened in the red, but rose to positive territory in the early morning, brushing off the weak fundamental news. However, in afternoon trading, stocks fell back into the red and were seesawing. This action can be seen by the gains for the dollar following its test of 92.50 and then a reversal and fall which favored the yen. The US dollar Canadian dollar continued to move in an upward channel, reaching close to the 1.2670 level in early New York trading. The pair is now about 450 pips higher than its low on November 25th, following sharp declines in the pair. Oil continues to trade under $50 a barrel, reaching $47 today, pressuring the loonie. At 4 p.m. today, which was unfortunately too late for this broadcast, the Reserve Bank of New Zealand will be cutting rates by as much as 150 basis points in order to keep its economy out of recession. Other releases tonight include Australia's building approvals and trade balance, along with Japan's capital spending. Overnight, both Switzerland and the Eurozone post GDP data, with the Eurozone being the third and final release. Tomorrow morning, the Bank of England and the European Central Bank will decide on interest rates, with expectations calling for a 100 basis point cut from the UK and a 50 basis point cut from Europe. From the US, we get weekly jobless claims and factory orders, while Canada releases building permits and its IVPMI. And that wraps up today's recap of the Forex news. Thank you for joining us here at CMSFX.com, and happy trading.